Good morning. Hello. Can you hear? Hello.
Good morning.
Can you hear me or not? Good morning. Um, Pretty sure that I'm audible clearly. So we'll start. Who wants to join can join after, right? So good morning, everyone. Today, what we're going to look at is we are going to slowly transition into the expenses side of things. We looked at revenue, and there's a small part in revenue that I want to mention to you. Now, you can see on screen the P&L that we are familiar with, that we do as for the Usali. Now, one thing that I didn't mention last week was we did room revenue, we did F&B revenue, other operating department, that is basically, what do you call it? The mine operating departments and rental and other income. Now, sometimes there are these taxes which we pay to the government, which are passed on to the customer in terms of the whole pricing. So in the pricing of our product or service, this particular tax is included. For example, in Sri Lanka, let's say the TDL or the Tourism Development Levy or SSCL, these can be passed on to the customer via the pricing. Now, which means that when you collect the money from the customers, you're collecting the money inclusive of this TDL, the Tourism Development Levy, or the SSCL, the taxes. And then what you do is you collect that money and then you pay to the government. But if you do this in this manner, if you collect the money, like I said, the taxes and then pay to the government, these expenses, this tax that is collected is also recorded as another income. Okay, so this other income will have taxes like TDL and SSCL. I'm talking about the Sri Lanka scenario here, which we collect on behalf of the customer through pricing and then pay to the government later. So you take the taxes as another income because we collect it from the customer, and that becomes a source of income to us. And from the bottom, it is taken out, right, as an expense. Okay, that is in the Sri Lanka scenario. Now, somebody will ask, again in the Sri Lankan context, why is VAT not taken then as an income? VAT, of course, we do the same thing. We pass it down to the customer. We charge it to the customer. However, whatever the VAT paid will be also paid to the government. But VAT, there's an input portion that we can claim. So we don't take VAT input as an expense in the P&L. It's taken in the balance sheet. Right? Unlike TDL and SSCL, where there is no mechanism to claim input as such like VAT. Therefore, VAT is taken as a balance sheet transaction rather than a P&L transaction. Don't confuse yourself too much about it, but you may come across this situation in real life when you try to apply the uniform system of accounts. So there might be a question, okay, where do you get the TDL? Where do you club in the SSCL? And this is the scenario. You pass it down to the customer as a pricing, and then you collect it on behalf of the government, but you pay to the government. But then there's no input element that can be claimed like that. Therefore, you take it at the top as another income, and you take it as an expense from departmental expenses so that it will get reflected in the cost of sales. Okay. But VAT you don't do because VAT, of course, you do the same. You pass it down to the customer, but there's an input VAT that you can claim, and therefore you don't take it as an expense or it takes as a balance sheet item. Okay, I hope that I'm clear, but don't get yourself too confused on this scenario. Why I told you was because in real life you may come across this complication when you try to apply uniform system of accounts. Okay, right. Now moving on. So last week we have done the revenue elements. Now we are slowly transitioning into the departmental expense section. So the first departmental expense that we are going to look at is the room expenses. The room expenses. Now, when we talk about room expenses, there are two departments that we talk about. If you can recall the first couple of slides that I showed you the key departments of a hotel, right? The frontline departments and then the back-end departments. So now who can tell me for rooms department, what will be the departments be captured under rooms department? Who can tell me?
Front office and housekeeping.
Yes. So it will be housekeeping and front office. Housekeeping and front office. So housekeeping, obviously, they are responsible to keep the hotel clean, including the rooms. Housekeeping. And front office is supposed to face the guest, check them in, check them out, and so on. So those are the frontline stuff. So housekeeping and front office are the two departments that we take under rooms department. And most probably in a hotel structure, housekeeping and front office will be headed by a rooms department director, director of rooms division. So under rooms division director, RDD, has two people reporting, executive housekeeper, and then the front office manager. This is how generally the department is structured. So you can see the rooms department director sits at the top, who oversees the entire department. Okay, right. Now let's see what are the expenses going to be captured under the rooms department. Right. Now, in the uniform system of accounts, right? Remember, when we talk about expenses, when we talk about room expenses, we talk about two things. One thing is the payroll and related expense. Payroll and related expense. Okay, payroll and related expenses. The other element is other expenses. So when you see in the P&L, the room department expenses, room expenses, you see both of these elements coming in. And most of the uniform system of accounts P&L structures will have these two line items. And then when you drill down, you see the breakdown for each of these items. So it's important to have these two separated because you normally don't mix payroll and related expenses with other expenses because payroll and related expenses should be monitored separately for each department. Again, because of its significance to the department profitability. So normally it's segregated so that it's identified separately. So under rules expenses, you have the payroll and related expense lab, and then there are other expenses. So now what we're going to look at is what does this payroll and related expense contain? And then after that, we look at what does the other expenses contain. Everything clear up to now? All good? One says yes. I hope the others are okay. Yes. Okay, great, lovely. Then let's see what goes under payroll and related expenses. So page number 36 of your study text, or you can refer to page number 8 of the Usali 11th edition. It has all these details given. It has a description on room revenue as well. There are many categories under room revenue that you can discuss, but I didn't actually touch upon it because there is a separate subject for room revenue. So I didn't want to touch upon it here. If you want, you can read and understand. It's very clear in that uniform system of accounts. So, right, let's now talk about the payroll and related expenses. Payroll and related expenses. Now, when you talk about payroll and related expenses, there are two things that you need to discuss. Payroll and related expenses has two things. One element is salaries and wages. Salaries and wages. What is salaries and wages? It contains the basic salaries of the people who are working for you. Obviously, the housekeeping and front office departments, right? Housekeeping and front office departments together, right? The basic salaries of these people. Then their EPF, ETF gratuity. I'm talking about the Sri Lankan context here because it's easier to refer to it that way. These are, of course, the employee benefits. The contributions that you make to the Employee Provident Fund and Employee Trust Fund, and also the gratuity. So in Sri Lanka, EPF will be 12% generally, and ETF will be 3%. So this is what gets captured into your PNL. Then gratuity, the basic calculation is the basic salary divided by 2 into number of years completed service. Number of years completed service. So that will be a gratuity provision, right? Standard procedure. Basic salary divided into 2, the number of years completed. So that is the gratuity provision, okay? Then we have overtime. So basic salary, EPF, ETF, gratuity. Overtime. So overtime, you know what overtime is. You work extra hours and there will be certain people in the department who are entitled to get the overtime payments. So again, there will be a special rate that is be decided by the company to pay hourly for the overtime. Just give me a minute. Okay, so the overtime, there will be an hourly rate that is being prescribed by the management, and the overtime rate. So this is normally calculated. You take overtime per hour and then into the number of hours overtime worked. So these overtime hours will be verified by the security department or the HR department, and then you pay a sum based on that. Then we have shift-based daily paid or hourly pay staff. So when you take a hotel, typically you might see different categories of staff. Now, who can tell me what these different categories of staff are? There are different categories of staff. In a sense, there can be permanent people. Likewise, what have you seen in your organizations, the staff categories? Can someone tell? Hmm? Any idea? I'm sure you have come across this.
Permanent contract, outsource.
Exactly, yeah. So we have permanent people. So these are people who have worked for some time and they got their permanency. And there can be um, contract staff. They're on a contract, 2-year contract, 1-year contract, sort of. Then there can be outsourced staff. Outsourced staff, of course, we won't take it under payroll and related expenses because they are not our staff. It is taken as a separate expense line item under other expenses. Okay, if they are outsourced. We talk about that in a little while. So permanent contract. Then we have daily pays or casual staff. So they are actually recruited on a daily basis based on the demands of the business operation. When the occupancy goes up, you need more rooms to clear, more public areas to be cleaned. You recruit an additional number of people just to clear that backlog or just to clear that load. So they are not here for on a permanent basis or contract basis, but they are recruited only when the organization needs them. So they work on a daily rate basis. So the organization may say, you're being paid AKR 2000 per day you work. So if the person wants, you go there, work and get your 2000 and then that's it. And if you come the next day, you get 2000 again. And then that's how it goes. So they don't have a permanent cost to the P&L. It all depends on how many people you recruit for how many days on casual or daily paid basis. And then you have the trainees. Right? There will always be a component of your cadre, which is consisting of trainees. Trainees also, there can be two elements. There can be either contracted trainees. Let's say the contract is for 6 months, internship. So then they go still under trainees. Or they can be under a daily paid mechanism as well. So the organization may say 600 rupees per day they work. So based on the number of days the people are recruited, the trainees, based on the demands of the rooms department, you pay a sum to them. Or there can be trainees allocated for the department for maybe 6 months as an internship or whatever. So then you get that expense also coming into your P&L. But what you take under shift-based daily pay and hourly pay is basically the amounts that you pay on a daily basis for these casuals and daily pays and so on. All right. Then performance-based bonuses and incentives. So these are basically bonuses based on performance and incentives, right? So this bonus can be the yearly bonus or customary bonus or whatever, will be calculated based on the mechanisms that the organization will establish. And then incentives. There can be many incentives for rules department. Incentives, what are the incentives that are paid to rules department staff? Have you come across incentives that are paid to rooms department staff? Front office can be separate, housekeeping can be separate. Now, tell me front office, what can they be given as incentives? Incentive payments. Give me an example or two. Anyone? What can be the incentives?
if you do some upsellings.
Yes, upselling. So that is a very common incentive that front office people get, upselling incentive, right? So let's say that the hotel has a normal standard room, and then the hotel has suites, right? The standard room goes at, let's say, $100, and the suite goes as $200. Now a person has made a reservation for a standard room, and they check in, and at the check-in, the front office, the person who is handling the guest, front office, through his selling capabilities, upsell them to a suite. They convince the guest to basically reserve a suite. So change the reservation, you change the room type. So the hotel will get an additional $100 extra. So this is an upsell. And for doing this, you give a small percentage of commission. It's not a commission, you can't call it a commission. You pay a small incentive, a percentage out of that revenue. Say 5% of that revenue gives as incentive to the front office staff who did that. So there are systematized systems, automated systems to monitor this, like upselling guru and all those things. So there are systems to monitor this automatically, or you can do it manually as well, right? So upselling incentives. That's for front office. Housekeeping, can you give me an example? What can they be given as an incentive? Give an example for housekeeping. Any idea? No? So housekeeping is mainly to basically clean the rooms up and tidy, ready to go, ready to sell. Keep it ready to sell, right? Mainly. So one of the common incentives that housekeeping staff get is basically based on the number of rooms that has been cleaned, you get a small incentive per room. For example, let's say a housekeeping staff, a person is required to clean 10 rooms per day. This is the target, right? 10 rooms per day, clean 10 rooms a day. So this person is supposed to complete 10 rooms per day. Now this person does 15 rooms per day. This person does actually 15 rooms per day. So he has done an additional 5 rooms above his target, above his daily requirement. So for these 5 rooms, the management may say for each extra room that you do for a day, there will be a $5 incentive that is given to that person. So how you basically, this is to incentivize these housekeeping staff to do more rooms. Of course, when you do more rooms, you have to, of course, have supervision and then ensure that the required quality is delivered. But from an incentive perspective, this additional 5 rooms will be uh, allocated a $5 incentive to this person. So that is typically a housekeeping staff incentive. Okay, understood? No, not understood. Everything clear or not up to now?
All good.
All good. Lovely. I hope the others are also okay. Damika, Noor, Jayat, Eranga. Eranga, you're new, right, Eranga? Nuan is okay. Prabuddha, are you okay? I hope so. Eranga,
Yes,
are
sir.
you a new student? Lovely, thank you. Eranga? Hello? I haven't seen you before, Eranga. So if you do have any question, you can ask me anyway. I hope everything's clear. Right. So we move on. Now that will be the salaries and wages portion. So these are directly linked to your staff salaries, starting from the basic, then coming from the EPF, ETF, overtimes, then the daily pays, hourly pay, and so on, and the performance-based incentives, performance-based bonuses and incentives, right? So that is one element, and this is normally referred to as salaries and wages, and sometimes referred to as direct payroll. Direct payroll, right? Sometimes referred to as direct payroll. You may come across these terms when you actually apply Usali in your real life scenarios, okay? Then we have payroll and related expenses. Related expenses. Now, what are the related expenses that we are talking about? These are the other expenses, for example, training expenses. Obviously, you have to train the staff. Housekeeping and front office staff will go through training, and that training cost will be monitored under training cost. So that will be a payroll related cost. Not a direct cost, but a related cost. Then meals and accommodation provided to these people. Meals cost and accommodation provided to these people, the cost of that. Transportation cost. What is transportation cost? Some of these employees are given transportation. For example, during the night hours, late night hours, sometimes the hotel may arrange transportation facilities for staff. So that cost will be taken as transportation cost. And the transportation cost is categorized under payroll related expense. Uniform cost, the uniform cost provided to housekeeping and front office people. Employee benefits. What are employee benefits? Now, in an organization, there can be many employee benefits that are given. For example, discounts offered for the restaurants operating at a hotel, right? Discounts. So the staff will get a 30% discount, for example, at the outlets. Or they can be room stays. On the employee's birthday, the employee will get a complimentary room stay. Likewise. So there are many benefit schemes that the organizations will implement. So there, the cost of those schemes will be taken under employee benefits. Okay. Then supplementary pay. Supplementary pays are additional pay that people will get. So these are the main expenses that payroll and related expenses will consist of. Okay. So we had the direct payroll, which is salaries and wages. And then we had the payroll related expenses, which is the other expenses supporting the staff, like training, meals and accommodation, transportation, uniform, and so on. All right. Now, this particular pattern will be replicated in F&B department, in administration department, all the departments across the hotel. The frontline departments and the back-end departments will all have this pattern going. So this will be repeated in the other departments as well. So that is why I took time to explain this a bit in detail, because now when we discuss F&B department, you will see the similar pattern. You will see the payroll and related expenses and then the other expenses. Payroll and related expenses It is basically this what we talk about. Okay. Any questions up to now? So the explanations for these items are actually given in the textbook that you received, or you can refer to the Usali 11th edition as well, which is explained in detail. And there are certain things that we may not come across because it's an international sort of publication. There are things that we don't really come across, but you can read and understand. It's very in detail. So I invite you to look at that leisurely. Okay. Any questions up to now before we move forward to the other expenses? Right. Nothing. Right. We move forward. Now we move into other expenses. Now, there can be lots of other expenses that are clubbed under rooms department. Okay. Now, what I have shown on screen is just a fraction of it. But if you look at the Usali edition 11, you will see a lot of expenses that are categorized under this, various expenses. So we'll take a look at of these expenses now. Okay. Now I'm going to refer to the page number 11 of the Usali book. So this is where you have the rooms and the revenue, and then normally we go to, and now we're going to expenses. So here you have the explanation for labor costs and related expenses. I explained this to you already. So I'm not going to talk about it again. And then we have the other expenses. Let's start by looking at cleaning supplies. What are cleaning supplies? Cleaning supplies. So obviously I said that the housekeeping department is responsible to clean the hotel, right? Rooms plus public areas. Rooms plus public areas. What are public areas? Areas like the lobby, right? Passageways and so on. So the housekeeping department is generally responsible to clean both areas, public areas and the rooms. So whatever the chemicals, whatever the cleansing, sweeping, polishing, waxing, and disinfecting areas associated with the rooms department. So the supplies that you use to conduct this cleaning is what you categorize as cleaning supplies, right? The cost of cleansing, sweeping, polishing, waxing, waxing in the sense, if you have tiled floors, you have to polish, wax, and so on. Disinfecting, cleaning, toilets, and so on are associated with the rooms department cleaning supplies. Okay. Remember, rooms and public areas are both categorized under rooms department, under cleaning. Okay, that you have got to remember. Then you have, don't worry about this too much, cluster services, just read and understand. But let's talk about commissions. I'm sure you have come across commissions when you talk about room expenses. What are commissions? So this includes the remuneration paid to authorized agents for securing room business for the property, such as travel agent commissions. Travel agent commissions. So for the travel agent that provides the room, you give a certain percentage as commission of the room revenue. Travel agent commission are generally reflected as an expense of the rooms department, regardless of whether the commission relates to accommodations only or to other services as well. What do you mean by that is, let's say, there is a booking on BB basis, bed and breakfast. So on the BB basis, the agent gives what say, let's say the rate is $100 and the commission is 10%. So you give the entire 10% cost to the rooms. Obviously, this will have a breakfast component as well, but you don't allocate the commission to FMB. You will allocate the total commission into rooms department. So this is done so that it's kept simple, and allocating a small amount of commission to FMB department, it doesn't really make sense to go through all that trouble. So that's what it basically means. The travel agent commissions are generally reflected as an expense of the rooms department, regardless whether the commission relates to accommodations only or to other services as well. Okay, so like the example that I gave, this practice is generally followed because allocations of this commission to other departments would not be cost effective. So now, how does this commission work? Can you tell me what are the commissions that you have come across when you are at the hotel working? What are the most common commissions that you have heard of? Travel agent commissions? What else? I mean, travel agent commissions? What are the types of, what is the most common travel agent commission that you come across every day? Can you give me some example?
OTA commissions.
Yeah, exactly. OTA commissions, right? So let's say you have bookings.com, Agoda, Expedia, and so on. And for the businesses that are coming, the production that is coming from each one of these channels will be commissioned at a predefined rate. Bookings.com maybe 18%, Agoda, Expedia maybe 15%, and so on. Right? So that is one element. OTAs anyway will be commissioned. So that actually carries the online travel agents carries the highest sort of commission percentage generally when you look at the channel mix. Okay, so when you strategize on the room strategy, you've got to look at these commission percentages and then do the pricing accordingly. And there are so many things that you need to look at. Okay, but for our purpose, we'll know that online travel agents is an example for commissions. The commission paid to online travel agents like the bookings.com 18%, Agoda, Expedia 50%, and so on. And there can be commissions paid to travel agents as well separately on the same basis. Okay. So this commission, remember, is recorded as an expense in the P&L. It's recorded as an expense in the P&L in the Usali system. Okay. Right. So commissions and fees paid to group, same thing. You can read and understand. Sorry, what happened there? You can read and understand. So go through this. Right. Then we have complimentary food and beverages. Complimentary food and beverage meaning includes the cost of food and beverage items related supplies provided on a gratis basis, meaning complimentary basis, such as breakfast on a or an evening reception. So sometimes when you sell the room, the breakfast component, or there may be something given free as right. So that is part of basically the rooms. So not under FMB, right? Breakfast or evening reception often provided in a club, concierge or executive lounge. So this is a special treatment that is given to the guests, right? So there can be, things like the room plus there's a high tea or something that is given free of charge, or a meal that is given free of charge. Okay. But it is exactly not part of the package, meaning that it is not charged for. Now, let's say I spoke to you about an allocation last week. So if the package for, say, BB, bed and breakfast, you're pricing it as 120, the whole package. And this is inclusive a charge of breakfast. So let's say $10 for breakfast and then $110 for rooms. Right? Now, this, of course, won't be taken as a complimentary food and beverage because you're actually charging the guest. And therefore, the revenue goes to F&B department and the relevant cost will go to F&B department as well. But if you're giving something complimentary, like the breakfast is given complimentary, you're not charging for that, right? As a service, you give the customer the breakfast free. That is part of the room. Then you take it as an expense under rooms department. Okay. For example, another example, the management can decide to record the cost of a wine bottle that is given in the room complimentary basis. Right? Let's say if the guest orders, if guest reserves a suite, there's a complimentary wine that is placed in the room. So that cost will not go under F&B, it will go under rooms department as complimentary food and beverage. So you've got to look at the context of this expense and then decide where to club it in. Okay, so that is why there, understanding this methodology is very important, right? And this can also include complimentary coffee often offered in the hotel lobby, where labor is provided and employees outside the room department refer labor and so, right? So just read it and understand, but understand the concept here, okay? Understand the concept. If the other service element that is tagged with the rooms is charged and it is part of the package, then you don't take it under rooms department, then you take it under a relevant department. But if it is not charged and it is given as a complimentary basis, then you know what to do now. Okay. Everything clear up to now? Guys, everything clear up to now? I hope so. Right. Then we have complimentary in-room media entertainment. Right. So the name says it all. Includes the cost of providing media services, cable, music, games, satellite video to guest rooms. It does not include the cost associated with pay for fee media. If you're paying for that service, if the guest is required to pay for that service, that will be taken under MOD. You know the concept now, right? If there's a revenue coming and as well as an expense, that will be normally taken as MOD or other operating department. But if it is not charged, it is given as again a complimentary service to the guest in the room, then it will be taken as an expense line item in the rooms department. Either MOD or netted revenue in miscellaneous income, meaning this is the net and gross basis that I spoke to you about. So when you read it, you will understand. I'm not going to talk about it too much. When brand and hotel standards dictate complimentary internet to all guests, then the expense should be recorded in information telecommunication systems. So in the Usali system, there is a separate line item. Actually, this is a new development. I think between Usali 10 version 10 and 11, there was nothing as such as information and telecommunication system. There was no separate line item, but now they have introduced this line item. So if the brand or the hotel standard dictate complimentary internet services to all guests, F&B, the hotel, all the guests who are there, not only rooms. Then that expense actually goes under information and telecommunication system expense. Okay, so again, look at the context of the situation and then decide where to club it in. Okay, I hope that is clear. Then we have complementary services and gifts, includes the cost of gift items used in gratis presentations for promotional purposes to guests and vendors of the rooms department, such as the cost of newspapers to guests on complimentary basis. So maybe you can put a box of chocolates or a pack of cookies, right? VIP gifts, guest room flowers, complimentary fruit baskets sent to rooms of frequent guests. So all these are expensed under rooms department, right? Clear, very, I mean, there's nothing really to be worried about there. Everything is clear. Then contract services. What are contract services? I think somebody mentioned when we discussed payroll, there will be outsourced people, outsourced services that are provided to the hotel. For example, window cleaning. If it is a high-rise building, cleaning windows can be outsourced to an outside party. So then it becomes a contracted service. The cost of that will be taken as outsourced cost or contract services cost in the P&L under rules. Okay, include expenses for activities performed for rooms department by outside contractors and professional service providers rather than hotel employees. So like window cleaning, then polishing, the marble polishing. It's very, very technical and there's specialized service providers for marble cleaning, the tile cleaning. So sometimes the organization will rope in an outside supplier to provide this service, right? So that is about that, right? So I gave you a couple of examples. Cleaning service and then marble polishing and so on. Corporate office reimbursements, don't confuse yourself too much about it. Just read and understand. Decoration cost includes the cost of decorative items used in the rooms department for holidays and special events like Christmas and so on, right? Pretty straightforward. Decorations also include the cost of fresh floral arrangements used in public areas. In washrooms and all, you place floral arrangements or maybe at the lobby. So the cost of these decorations, the floral arrangements and so on that are at the lobby and in the rooms or in the public area, the washrooms are taken as decoration expenses under rooms. Guest room flowers should be included in complimentary services and gifts, right? Now, if I ask a question, now Christmas, for example, will have decorations all over the hotel, including restaurants, outlets. So the decorations that are done at outlets, where should they be captured under? Should it go under rooms? I'm asking a question. Decorations are that are done at the restaurants. Where should it be captured under?
F&B expenses.
F&B expenses. So when you go through the F&B department, you will see a similar pattern, right? We have the payroll related expenses and the other expenses. So decorations that are done for outlets are taken as other expenses under F&B department. Okay. Hope that is clear. Then you have some other expenses, dues and subscriptions. Just read and understand, very simple. Entertainment in-house includes the food and beverage cost, gratis service charges and sales taxes. Just read and understand. Equipment rental, right? Includes the cost cost of renting any type of equipment that are used either politically in the rooms department or replacement for equipment out of service on a temporary basis. Equipment lease payments made under qualified operating lease are, so don't get too confused over this. This is very technical here. Operating lease and finance leases and so on. That is accounting related stuff. So I don't think that is. Hold on, give a minute. Right? Guest relocation cost. Now, what is guest relocation cost? What is guest relocation cost? Can somebody tell me what it is? Commonly referred to as overbooking cost. Have you come across overbooking cost or guest relocation cost rather? So read this. Includes the cost of renting accommodation in other properties when a decision is made to move a guest to another property because of lack of available rooms. Because of a lack of available rooms. This item also includes any incidental cost, gratuities or compensation paid in connection with these circumstances. So lack of availability of rooms. So the hotel is overbooked, let's say, for example. So we have, let's say the hotel has 100 rooms and now the reservation is for 125 rooms. So 25 rooms overbooked. 25 rooms overbooked. So these 25 rooms will be transferred to another hotel. You have no choice but to transfer it to another hotel. Right? And the cost of doing that. Obviously, the other hotel will charge you for these 25 rooms, right? So the cost of that is taken under guest relocation cost, or commonly referred to as overbooking cost. Now, why do hotels do that? Why do hotels do overbooking? So one thing is to keep these rooms in the same hotel chain. Sometimes overbooking is done. Or ideally speaking, overbooking should not happen because it will not give any benefit to the hotel. Because you have to pay for the rooms that are booked outside the hotel. The other provider or the other hotel will basically charge you for those rooms. So at the end of the day, you don't get anything. But if you are a part of a chain of hotels, right? If you are a part of, let's say, a group of hotels. So there are, let's say, there are hotel 1, hotel 2, hotel 3. So hotel, you get a booking. Let's say hotel 1 has 100 rooms available. The hotel A is getting overbooked by plus 25. That means you have got 125 rooms. So this 25, still hotel 1 will take, but then transfer this to hotel 2 or hotel 3 so that this 25 will not go to an outsider, the complete outsider. Right? So you keep these 25 rooms still within the A group hotels. But of course, hotel 2 or 3 will charge hotel 1 for the 25 rooms. So actually speaking, hotel 1 won't really have any benefit. You get a revenue, but then from the same time, you will have to pay for that 25 rooms as well. You will get the revenue from the whoever the agent who booked you, but at the same time, there will be a line of expense that is coming to you. So it's not really profitable to do overbooking on an individual basis. Okay. But nevertheless, this overbooking cost or the transfer cost is taken as guest relocation cost. Then we have guest supplies cost. Guest supplies cost. What is guest supplies cost? This includes the cost of consumable supplies and amenities provided for guests in the guest room, such as soaps, shampoos, lotions, toilet tissue, shoe shine mitts, shower caps, writing materials, and so on. So when you go into a hotel room, you will see this. The soaps, shampoos, lotions, toilet tissue, shoe shine, whatever, shower caps, writing material. There can be combs, bath salt, various things that you can put in the room. So the cost of those are taken as guest supplies. Generally, these are referred to as the guest amenities placed inside the room. So some hotels actually take the water bottles placed in the hotels on a complimentary basis. When you go into a hotel room, you will see water bottles. The water bottle cost is also clubbed under guest supplies costs. Although it is not mentioned here, that is a common. So it's actually mentioned here, such as bottle offering provided at no charge or guest, such as bottled water, coffee provided to guest rooms are included in guest supply. So even the water bottles that are placed and the complimentary tea and coffee sachets that are placed is also part of the guest supplies cost. So when you look at the whole list of guest supplies, you will see all these line items popping up. So again, what are these guest supplies? All the hotel room amenities that are given to the guests. Right? I think it's very clear. Or is it not clear? Do you want any examples given? Is it clear, guys, for you? Guys are there? Right. All clear. Then you move down. Guest transportation cost, very straightforward. If you're providing a transport service to the guest, let's say airport pickup or airport drop or whatever, that cost is included as other expenses. But look at the context again, because this service may be outsourced to a third party, right? So you have to look at the context. So based on that, the contract that you have with the outsourced party, you may record it as an MOD or you record it as a cost. Okay, look at the context. So includes all the costs associated with transporting guests to and from the property, such as fuel costs, washing, cleaning vehicles, and so on. So this will be a scenario where the hotel is operating this service without an outside provider. Like the hotel is renting out certain vehicles to provide this service, or they do their own thing. So then the cost will directly go under this. Then the laundry and dry cleaning expenses. So obviously the rooms, the linen that is there will have to get laundered. So the cost of these items being laundered will be taken under laundry and dry cleaning. So how it normally happens is there will be an allocation that is coming from the laundry department expenses, right? Laundry department is a separate department. So the laundry will incur expenses to clean all this laundry in the hotel. So the laundry will get linen from the rooms, plus the public areas. It will also get linen from various other places like the gym, F&B outlets. So when the laundry accepts these goods, or rather the laundering items, they will keep a track of how many pieces received from rooms and public areas. Let's say 125 pieces. Or you can measure them in kilograms also. Let's say 100 kilograms from rooms and public areas. From the gym, let's say you have received 50 pieces or 10 kilograms, for example, hypothetically, okay? And then from FMB, there's 20 kilograms. So based on this weightage or the number of pieces, the total expense of the laundry department will be allocated to the relevant department based on the number of pieces or the weightage. The cost of the laundry is allocated to each of these department. So rooms department will get charged the cost that is proportion to 100 kilograms or 125 pieces. So this will be discussed later. How do we do this allocation later? But understand that how the laundry and dry cleaning expenses get allocated to the rooms department. Okay, so what is explained here is exactly that. Is it clear? Right. If it is not clear or you need examples or whatever that you need to understand it better, please let me know so that I can give some additional data. Then license and permits, national, local, jurisdiction license, and so on. So going up or down in a minute. Linen. Now, when you talk about linen, understand this carefully. Linen can be rented. If it is rented, right, there are companies who rent out linen. So if it is rented, then you take it as an expense in the P&L. But if you purchase it, if linen is purchased, of course, the linen can be used at least for 2 years or 20, whatever the number of washers. Don't get your confused. Let's say generally linen can be used at least for 2 years. But as accounting standards, we normally take the linen for 3 years. It's part of CCGR, cutlery, crockery, glassware, and linen. We refer to it as. So if this linen is purchased, not rented, if it is purchased, it's our asset. And this can be used for many, many years. If that is the case, you will not record it under expenses in rooms department. Where would you record it under in that case? If it is purchased, balance sheet under what? The asset register, fixed assets. Right? In your fixed asset register, there will be a component for cutlery, crockery, glassware, and linen. So linen will be part of the fixed asset in the balance sheet. But here, I don't know what is the reason that has not been explained here. So just if you want, you make a note. Linen, if purchased and kept for more than 1 year, most probably for 2 years, 3 years, it will be taken into the balance sheet in the fixed asset register and then depreciated over time. But if it is, of course, rented, you will pay a rental fee to the service provider or the renting party. And then that, of course, you can take it as a P&L item, profit or loss item, expense line item, because simply the rented items are not owned by you. It's not your asset to record in the balance sheet in the first place. So you record it as an expense in the P&L. I hope that is clear. So if you want to make a note, that part, the purchasing part, is not mentioned in this paragraph. So don't get confused and you have to record it accordingly, right? Miscellaneous expenses, okay, there's nothing to talk about. Then operating supplies meaning, like for example, alarm clocks, key cards, room key cards, do not disturb signages, please clean signages and so on, printing and stationery items, right? Clearing supplies and guest supplies. So if you read it, you'll understand, right? So I'm not going into details. Operating supplies, postage and overnight derivative charges related to rooms department, front office and housekeeping. So front office will have generally the high office postage and overnight charges because of the heavy volume that they handle. Postage and printing and stationery. So both I'll take together. Okay. Reservations. Now, what is reservations? Reservations is a fee that is being paid to a central reservation system. So if the hotel is on a central reservation system that helps generate reservations to the hotel, there may be certain fees that is payable to this reservations system. So that is what you call a reservation system fee. And that is what is recorded under reservations expense under rooms. So reservations also include any cost of any communication lines included in the internet site communication costs. So this is regarding a fee that is paid to this service. But if there is a system cost involved, like hardware or software, which is non-transactional, it's not a fee or something that you have to pay, but it is the whole system that you have in the hotel. Then that reservation system are charged under information and technological telecommunication system. So don't get confused, just understand that the reservation cost referred to here in the rooms department is a fee that you pay to have this reservation system, to be participating in this reservation system. You have to pay a monthly fee or an annual fee or whatever. That will be your reservations fee. Okay. So if you want more details, you can read and understand. Then you have royalty fee. So you can read and understand, and training fee. Now, training fee, although in this particular publication, it is categorized as other expenses, normally training fee is taken under payroll and other related expenses. In fact, payroll related expenses. I explained to you this already. So generally, because it is something to do with the employees, it is taken as part of the payroll and related expenses. Okay. Then we have travel meals, travel and uniform costs. Uniform costs I already spoke about. Again, uniform costs, although in this publication it is categorized as other expenses, we normally categorize this as related payroll related expenses because it is again something to do with staff. Then uniform laundry includes the cost of cleaning uniforms and employees of the rooms department, whether performed by in-room facility or contracted to another outside party. So I spoke to you about this laundry expense being allocated to the rooms department. So even uniform laundry, that is the uniforms of the housekeeping and front office departments, the uniforms of the housekeeping and front office departments are taken as laundry expenses in that laundry allocation. Okay. So bed linen and all those things that are laundered, plus the uniforms of the housekeeping and the front office staff are all categorized as laundry expenses in that laundry expense line item. Okay. Right. So these are some of the key expenses that are categorized as other expenses in the rooms department. But these are not the only ones. So you have to always, again, I reiterate, look at the context, look at the nature of the expense, and then decide where you would like to plug it in. Where's the most appropriate place to plug it in? All right. Everything clear up to this point? Right, good, good. I see. How about the others? Nuan, Prabuddha? Nuan, good. Prabuddha? Are you there, Prabuddha?
Yeah, I'm okay, sir.
All right. So we have now done the rooms expenses. And now when you combine, my dear students, you have the rooms revenue, you have the rooms department, department expenses in the P&L. You can do a mini P&L for the rooms department now. Now the profitability of the rooms department is very, very important. And it is monitored very, very closely by the management. Okay. So sometimes you would have heard when at management discussions, at KPI discussions, the rooms department profitability is 78% of the rooms revenue and so on. So that is the rooms department profitability that you calculate based on the revenue data and the expenses that we spoke about. So you commit it as a mini P&L and have it separated. And remember that is monitored as well separately. Okay. So as you can see in the screen, you have a mini P&L for the rooms department. So you have all the revenue data that we learned about, and you have the expense data that we learned about. And then finally, you have the department profit. Now, this is very, very important. In the uniform system, this is something that is uniquely, actually, it's a unique benefit that we have in the Usali system. Because Usali system is a departmentalized structure, you can monitor the performance of these departments separately. So that is the importance of Usali. Departmental performance can be monitored separately easily. So now you can see when you club the rooms revenue and the rooms expenses that we learned about all this time and create a mini P&L for the rooms department, you get the department profitability. And then based on the department profitability, management will make certain decisions, right? Right. Let's look at some of the key KPIs that we look at under rooms department. All right. Oops. So as I said, the rooms department profitability, that is a mini P&L that is created based on the Usali departmental expenses and revenues. Generally, the rooms department profitability is high compared to the F&B department, the other main department, revenue generating. This should stand at around 70 to 80% and upwards. Should, generally. If you look at an F&B department, generally, the profitability is around 35 to 40%. This is F&B. Rooms department normally carries 70 to 80% profitability, generally, or even upwards. So as you can see, rooms department is a very, very profitable department. So when it comes to strategizing, all these come into play. Okay. Then cleaning supplies cost per occupied room, I will take guest supplies cost per occupied room together. Cleaning supplies cost, you already know what it is. So you take the total cost, cleaning supplies cost, let's say 100,000, and you divide it by the total occupied rooms. So total occupied rooms will be the revenue rooms, the rooms that have been paid for, plus the complementary rooms. Revenue rooms plus the complementary rooms. Because the cleaning supplies will go into all the rooms, irrespective whether they are paid or not. Even if they are given on complimentary, you have to still provide the cleaning service to this room. So that is why we normally take per occupied room, meaning total number of rooms, revenue rooms plus complimentary rooms. So this is the cleaning cost per occupied room. Or guest supplies cost per occupied room. All these guest amenities that we spoke about, including water bottles, what is the cost? Let's say 200,000 divided by total occupied rooms, so revenue rooms plus complimentary rooms, cost per occupied room. So these are very, very crucial sort of KPIs that the management will always monitor, closely monitor, so that their expenses are kept on check. Okay. You will definitely come across this in your monthly P&L meetings and KPI meetings if you get the chance to participate in one of those. Then commission cost, I already mentioned commission cost. Commission cost as a percentage of room revenue. So you take the total commission cost and then divide it by the rooms revenue as a percentage, commission cost as a percentage of revenue. So this comes in handy even to identify any anomalies, right? For example, I said, let's say the bookings.com commission should be 18% of revenue, right? 18% of revenue. So if you take the commission paid to bookings.com and divided by the revenue that is generated from bookings.com, you should ideally get 18%. But if this 18% becomes 30% in this calculation, that means there's something wrong. It can't be. Right? So this particular KPI is important to identify any anomalies as well. But generally, commission cost as a percentage of room revenue and commission cost per occupied room is also calculated. Okay, commission cost per occupied room. So here, there's no hard and fast rule that you have to take complimentary rooms, but you can even take the cost per revenue room as well. Right? It's up to the management to decide how they want to monitor this KPI. Payroll and related cost as a percentage of room revenue. So housekeeping and front office payroll cost, payroll and related cost divided by the total room revenue will give you the payroll cost percentage of that particular department. Then payroll cost per person. You take the total payroll cost divided by the number of staff in housekeeping and front office. So these are some of the key KPIs, okay? Not the only KPIs, but the key KPIs that we normally monitor under rooms. But there can be many more others. All right? Right. Any questions up to now? Any questions up to now? All good? Right. You want? Fine. Now I have shared a case study with you in the morning through WhatsApp. Case study 6, I believe. So the requirement here is to do a mini P&L for the rooms department based on the information that is provided. So there are a couple of information that is given in terms of commission and so on. So what I would like you to do is to read it, take about 10 minutes and do a mini P&L for this particular hotel, for the rooms department. All good? Can you start on that case? And then in 10 minutes, we'll discuss what your findings are. Good? Bad? All good? Can we start? Okay. One says yes. Tilina says yes. Damika is good. Ranga? All good?
All good, sir.
All good. Okay, let's start on that case study. And if you have any questions in the meantime, you can ask. Okay, I'll give you a couple of minutes to do this. Are all done? Can we discuss? Right. Hello. Guys, are you there? Can we discuss and finish it off? Hello? Hello? Are you all there? Hello?
Yes, sir. Yes, sir.
All right, okay. Done? Shall we? Okay, I think, are we okay to go? Do you need more
Okay.
5 minutes more? Okay, Tilin is okay. How about Dhammika? Dhammika, Nuan, Niranga. How about you all? Can we discuss? Right. Anyway, so the requirement was to construct a mini P&L or a sub P&L, if you would try to call it, for the rooms division for the year 24-25. And there are certain KPIs that needs to be calculated: rooms department profit or loss, cleaning, supplies cost per occupied room, commission cost as a percentage of room revenue, commission cost per occupied room, guest supplies cost per occupied room, payroll related cost as a percentage of room revenue, payroll and related cost per person. So this is a requirement. So as you can see on the Excel sheet, I have done a small sort of profit or loss statement here. So if you agree, you give a thumbs up, or if you don't agree, you need to tell me, okay? Room revenue is 895 million, correct? Yes, no? Right. Take that as a confirmation. Right. Minute. Right. So we did that. Then the room revenue, the expenses. Salaries and wages expense would have come to 670 million. That is with the basic salaries, EPF, ETF, expenses are given. Gratuity. Did you get 175 million? I think the basis was given. The gratuity basis was given, provision. Gratuity provision is calculated on the formula basic salary divided by 2 into number of years completed. So now, one point that I would like to make here is, now there is no number of years of completion that is being given. But normally what organizations do is, every year you have to make a provision for the gratuity. You have to accrue for the gratuity. Say a person is leaving or retiring in 20 years, you got to accrue his gratuity every year. This year, next year, third year, fourth year, and so on, until the 20-year reaches. And then when the 20-year reaches, you make the total payment based on the provisions that you have made. So here, if you look at an annual provision, you just have to take the basic salary and divide it by 2. That's your annual provision that you it's a provision that you make every year until that person resigns. So every year as an organization, you have to provide for the gratuity, make a provision for the gratuity. All right. So what you do, you take the total basic and divide it by 2. That will be your annual provision. Okay. Is that understood? Did you get it correct? Understood, or you need me to explain it again? One says yes. Okay, good. What about the others? Did you understand that concept, the provision? Right. Good. Lovely. Then overtime is one time 1.5 average hourly basic. So what is overtime being said? So overtime cost is given 72 million. So you don't have to calculate anything, so that you just plug it in. Training staff salaries, I think, given, right? Or is it a calculation that you have to make? Training staff. Did you get 20 million? Trainee staff salary during the period, 200 trainees were employed, 100 days at the hotel. Each trainee is paid a daily wage of 1,000. So very simple, 200 into 100 into 1,000 rupees per day. So that will be a total cost, right? Simple, straightforward. Is that right? Everybody agrees? Yes, I believe yes. If not, let me know. And then there's an incentive scheme also. So what is the incentive scheme? The hotel pays 1,000 per every room cleaned above the target number of rooms to be cleaned to the room cleaners. This is what I explained when I explained the incentive. The rooms cleaners have cleaned 500 rooms above the target. So for each of these 500 rooms, you got to pay a 1,000 rupee incentive to be cleaned during the period, right? So 500 rooms extra, 500 into 1,000 rupees. That is a 500,000 incentive that is paid to the room cleaners. So in total, your salaries and wages or the direct expenses will come to 671 million. Agreed or not agreed? Agreed or not agreed? Agreed. Lovely. So if you don't agree, let me know. Then the payroll related cost, we have the training cost, straightforward, meals expenses, uniform, discounts given to the staff. I explained to you already about this discounts. That is an employee benefit, like the discounts that you get at restaurants and so on. So that all accumulates to 100 million. And therefore, the total payroll and related costs will come to 771 million. That is for 250 employees. Then 250 employees plus actually you have to add the cashiers and the daily pays, but sometimes you don't show the cashiers and the daily pays as a or the trainees as part of the card. You just take the expense, okay? Right. Then the other expenses, you get guest supplies cost, which is, I think, straightforward, which is given. Cleaning supplies cost, TV and internet rental cost, guest relocation cost, transport cost, communications, and commissions. Did you get 78 million? I think there was a small story for commissions. 18% commission is charged on the total online travel agent revenue. So how did you calculate that? You take the online travel agent revenue, that is the OTAs, 1.5 million USD into, of course, the LKR figure into 18%. So that will give you the total commission cost for the PNL. Okay, 78 million, right or wrong? Did you get this? Hello? Got it. How about the others? Yes, I'm getting 2 thumbs up. Nuan and Eranga. All done. So you get the total other expenses as 128 million. Okay, so this is your basic P&L structure. Of course, you have to show the Roofs Department profit or loss for it to be a complete profit or loss statement. Okay, Roofs Department profit. So the Roofs Department profit or loss here will be minus 1%. Unfortunately, it is a loss of 4.8 million rupees. Unfortunately, that is a loss. Okay. So this percentage actually doesn't mean anything. You don't need that because it is a loss basically. Then the cleaning supplies cost for occupied room is 1,099. Am I correct? Commission cost as a percentage of room revenue. Commission cost as a percentage of room revenue. Okay, total room revenue is 9%. Commission cost per occupied room 8,679 per room. Right? You take the total commission cost divided by the total number of rooms. Guest supplies cost per occupied room 2,198. Payroll related cost as a percentage of room revenue is 86%. And payroll related cost per occupied per person per month 256,975. Now here some of you may have taken the total card as 250. But if you want, you can add the trainee staff, and there were some casuals, if I remember correct. Trainee staff. There was some trainee staff. 200 trainee staff, remember? If you want, you can add, but generally, these people are not add to the card. Generally, what you take as the permanent card and the contract card is what you reflect in your total card as a card number. Because these trainees and casuals and so on will change every day, and they are taken based on the demand requirement, and that can fluctuate every day. So you don't normally take those people to the number of your card. So that is why in this case study, you have been clearly informed that there are, let's say, there are 250 employees in the department. So that is without trainees and casuals and so on. That is how normally it is given. But there are certain companies who show the number of trainees and a number of casuals in their card. So you got to look at the context and then do your calculations accordingly. Okay. Right. Is it clear, or I think we have calculated everything that is required? Did we? Yeah, we have calculated everything. Right. Nuan, yes. How about Eranga? Are you okay? Are clear? Any questions? Right. Lovely. So everybody is okay, I guess. So that is what I wanted to cover today. So you will see this pattern for F&B department as well. You have the revenue. Of course, you will have the expenses split into payroll and then other expenses. And then you do a mini P&L for F&B department as well. You do mini P&Ls because these are two important departments, right? And for all other departments, mine operating departments, you can have mini P&Ls developed. Right. So if there are no further questions, I will meet you next week with the F&B department side of things. All right. Thank you very much.
Thank you.
Thank you, sir.